If you live in the UK, you may have seen banks advertising interest rate like these, but it's a lie or at the very least misleading, and in this video I will explain why exactly. So last time we looked into why banks are not passing on the higher interest rates to easy access savings accounts, but I did mention there are some regular saving accounts that do seem to pay high interest rates, some even as high as 7.5%. But there's a catch, that's not what they're actually paying you. Money Saving Expert has compiled some of these high interest savings accounts in this nice table here. As you can see, Skipton pays 7.5%, First Direct pays 7%, Lloyds pays 6.25%, and NatWest 6.17%. Now, I have to say I actually do have these last two accounts, so I will give you more of an insider view later in the video. For now, here's why these rates are not what you actually get. If you check the terms and conditions, the nature of these savings accounts mean they limit the amount you can put in compared to their traditional savings accounts. Take Lloyds for example, the regular saver pays 5.25% or 6.25% if you're a Club Lloyds member, but check the limit out. You can only put in between £20 to £400 a month. In contrast, their traditional savings counterparts pay between 1.1 to 1.8% for non-members and 1.5 to 2.2% for members. Both have no upper limits on savings. Okay, but let's put aside the limit issue and let's focus on the actual interest paid. This account is valid for 1 year, then you get automatically switched to their traditional savings counterpart I mentioned earlier. Therefore, if you paid in the maximum, that is £400 a month for 12 months, your balance including interest at the end would be £4,950, and that's according to their own website. But something doesn't add up here, literally. You paid in a total of £4,800, which means you earn £150 in interest over the year. 150 divided by 4,800, that's 3.125%, not 6.25% advertised. I built an Excel sheet to find out how this is being calculated. As it turns out, the interest rate is calculated on a daily basis, which means depending on which day of the month you pay in the £400, you'd get slightly different final balances. For example, if you paid in at the beginning of the month, you'd get about £4,961, but if you paid at the end of the month, you'd get £4,939. I believe the example on the Lloyds website assumes deposits in the middle of the month, as that gets me closer to the £4,950 figure quoted. And accordingly, your actual interest rate will vary between 2.89% to 3.35%, depending on the day you choose to deposit. The later you add money into this account, the less interest it will earn because it will have less time to compound until the end of the year. Either way, it's nowhere near the value which you'd expect to be paid on £4,800 at 6.25% interest rate. You're actually getting half the interest you might expect, and this interest is not paid to you until after 1 year. In fact, you'll be getting more from a traditional savings account from one of these banks, again kindly compiled by MSE. Even Chase, not on this list, pays 3.8%. Now, even though I use Lloyds in this example, that's pretty much how most of the regular savings accounts work. They essentially fix a rate for 1 year, give you half the interest rate, and then transfer you to their lower rate traditional savings account. Except for NatWest, which I do have an account with. They pay interest on a monthly basis, and last month they paid me £11 on a balance of over 2.2k, which works out about 6.17% rate, just like the advertised. Unlike the Lloyds account, they won't switch you to another account after 1 year. However, do bear in mind that this interest rate is variable, meaning they can change it if they want to. But back to those fake interest rates, isn't it nice when things are like you'd expect them to be instead of unpleasant surprises? I mean, what's the point of banks misleading their customers? What do you think will happen when they find out? That could lead to an erosion of trust, and in the financial sector, trust is needed more than ever, especially with the scams going around these days. All in all, I think you need to be careful with these regular savings accounts. They tend to have more restrictions, like the minimum and maximum deposits for each month. Sometimes these benefits may be temporary until they switch you to another account. But what irritates me is that they advertise an interest rate which you don't really truly get, and they shouldn't be allowed to do that. I spoke to someone who works in the finance industry, and he mentioned that I could report this to the FCA as a misleading promotion. And indeed, the FCA has a form specifically for things like this. So let me know in the comments below, do you think this is misleading or not? And that's it from me. Thank you for watching, and see you next time.